Based on the historical data and forecast, Bitcoin shows a clear upward trend. The price has consistently broken through resistance levels and the forecast for the next week indicates continued growth, potentially reaching $111,700. The RSI consistently hovers above 60, suggesting bullish momentum, but dips below 80, indicating that the asset is not yet overbought. The Bollinger Bands have been widening, suggesting increased volatility and potential for larger price swings. Therefore, my strategy will focus on capitalizing on this upward trend with a combination of RSI and Bollinger Band signals. My recommended strategy is a long position with an entry price of $107,300 on May 21, 2025. The stop loss will be set at $106,500, just below the lower Bollinger Band to protect against potential pullbacks. The initial target price will be $109,100, aligning with the first day's forecast. If the price reaches this target, we will move the stop loss to the entry price of $107,300 and set a second target price of $110,300, based on the subsequent forecast. Finally, if the price continues to rise and breaks above $110,300, we will adjust the stop loss to the break-even point and aim for a final target of $111,700, the highest forecast price for the week. This strategy combines trend following, risk management, and profit-taking techniques to maximize returns while minimizing potential losses. Based on the historical data and forecast, Ethereum shows a strong upward trend. The price has consistently been moving towards the resistance level of $2,540, and the forecast indicates further increases, reaching $2,770. The RSI consistently above 70 suggests overbought conditions, but the upward momentum is undeniable. Considering this, I recommend a long position strategy. We will enter a long position at $2,610, coinciding with the first forecast price. The stop loss will be set at $2,540, just below the recent resistance level and support price, to limit potential losses. The initial target price will be $2,700, aligning with the forecast for May 23, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback. If the price retraces to the center of the Bollinger Bands, around $2,650, we can consider adding to our position. The second target price will be $2,770, based on the forecast for May 27, 2025. This combined RSI and Bollinger Band strategy aims to capitalize on the strong uptrend while mitigating risk with strategic stop loss and target prices. The overall portfolio will be a long position with an initial entry at $2,610, a stop loss at $2,540, a first target at $2,700, and a second target at $2,770. Based on the historical data and forecast, XRP shows an upward trend with consistent support at $2.35. The RSI values fluctuate but generally remain within a range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been expanding, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $2.41. The stop loss will be set at $2.36, just above the support level, to protect against a potential downturn. The initial target price will be $2.44, aligning with the forecast price and the upper Bollinger Band. To optimize returns, we'll implement a dynamic target price strategy. If the price reaches $2.44, we'll move the stop loss to the entry price of $2.41, securing a risk-free profit. Subsequently, we'll set a new target price at $2.47, capitalizing on the continued upward momentum. This approach combines the RSI and Bollinger Band signals with support and resistance levels to maximize profit potential while minimizing risk. The portfolio should allocate 60% of capital to this strategy, with the remaining 40% allocated to other uncorrelated assets for diversification. Based on the historical data and forecast, BNB shows a slight upward trend. The price has been fluctuating within a range, with support at $639 and resistance at $651. The RSI indicates periods of both overbought and oversold conditions, suggesting potential for price corrections. The Bollinger Bands show that the price is currently near the upper band, indicating a potential for a pullback. Therefore, I propose a strategy combining trend following and mean reversion. We will initiate a long position when the RSI falls below 50 and the price touches the support level of $639. The entry price will be $639. To manage risk, we will set a stop loss at $635. The initial target price will be the resistance level of $651. If the price reaches $651, we will move the stop loss to break even at $639 and set a secondary target price at $660. This strategy aims to capitalize on short-term pullbacks while benefiting from the overall upward trend. This portfolio is the most efficient because it considers historical data, forecast data, support and resistance prices, and technical indicators. Based on the historical data and forecast, Solana shows a slight upward trend. The RSI fluctuates between 57.1 and 77.3, indicating periods of both oversold and overbought conditions. Considering the RSI levels, a strategy focusing on short-term pullbacks is suitable. Specifically, when the RSI dips below 60, we will enter a long position. The support price of $165 provides a potential entry point. We will enter a long position at $166, set a stop loss at $165, and target a price of $173. This strategy leverages the current upward trend and aims to capitalize on minor corrections. For the forecast period, the price is predicted to range between $173 and $179. The Bollinger Bands indicate potential volatility. We will utilize a combination of the RSI and Bollinger Band strategies. When the price touches the lower band and the RSI is below 60, we will enter a long position at $173. The stop loss will be set at $172, and the target price will be $179. This approach combines the momentum of the RSI with the volatility signals from the Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, Dogecoin shows a generally upward trend with some volatility. The price has been fluctuating between a support of $0.215 and a resistance of $0.234. The RSI has mostly remained within the 50 to 80 range, indicating periods of both neutral and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering the forecast prices, which predict a rise to $0.25, I recommend a long position strategy with a focus on capitalizing on the upward momentum. My strategy involves entering a long position at $0.233, coinciding with the first forecast price and near the recent resistance. A stop-loss order will be placed at $0.215, just below the support level, to protect against potential downside risk. The initial target price will be $0.25, aligning with the forecast price range. If the price reaches $0.25, we will adjust the stop loss to break even, securing the initial profit and allowing the position to potentially benefit from further upside. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Cardano exhibits a slight upward trend, bouncing between a support price of $0.705 and a resistance price of $0.762. The RSI fluctuates, indicating periods of both overbought and oversold conditions. The Bollinger Bands show that the price has been trending within the bands, suggesting moderate volatility. Given the forecast prices, which consistently hover around $0.773 to $0.787, I recommend a long position strategy. We will enter a long position at $0.773, placing a stop-loss order at $0.705 to protect against a potential downward reversal. The initial target price will be $0.858, based on the upper Bollinger Band. To refine this strategy, we will incorporate the RSI. If the RSI drops below 20, indicating an oversold condition, we will consider entering a long position at the prevailing price. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will consider exiting the position. For this specific scenario, given the current RSI and forecast, we will stick to the initial long position at $0.773 with a stop loss at $0.705 and a target price of $0.858. This strategy balances potential gains with risk management, capitalizing on the predicted upward trend while safeguarding against significant losses. Based on the historical data and forecast, TRON shows a slight upward trend. The price has consistently bounced off the support level of $0.248, and the forecast indicates continued upward movement towards $0.276. The RSI has fluctuated between 54.7 and 71.6, currently at 62.1, suggesting it's not yet in overbought territory. The Bollinger Bands are widening, indicating increased volatility, with the price currently near the middle band. Considering these factors, I recommend a long position with an entry price of $0.269. Place a stop-loss order at $0.266, just below the recent price action, to protect against a potential pullback. For the target price, I'll aim for $0.276, aligning with the forecast and the upper Bollinger Band. This provides a reasonable profit margin while acknowledging the potential for further upside. To enhance the strategy, I'll incorporate RSI signals. If the RSI drops below 30, consider adding to the position at $0.248, the support level. Conversely, if the RSI reaches 80, take partial profits at $0.273. This dynamic adjustment will help maximize returns and manage risk effectively. This portfolio combines trend following, support and resistance levels, and RSI signals to create a robust investment strategy for TRON. Based on the historical data and forecast, SUI shows a slight upward trend with periods of consolidation. The RSI fluctuating between 60 and 76 indicates that the asset is neither strongly overbought nor oversold. The Bollinger Bands show that the price has been trading within the bands, suggesting moderate volatility. Considering the forecast prices, which are consistently above $4, I recommend a long position strategy. The entry price should be $4.01, coinciding with the first forecast price. A stop-loss order should be placed at $3.85, slightly below the recent low and above the support price of $2.2, to limit potential losses. The initial target price is $4.16, the highest forecast price, aiming for a quick profit. To optimize returns, I suggest a dynamic strategy incorporating the Bollinger Bands. If the price touches the upper band, consider taking partial profits at $4.32 and moving the stop-loss to the center of the Bollinger Band, which is around $3.74. This allows us to secure gains while protecting against a potential reversal. If the price falls towards the lower band, and the RSI approaches 20, consider a small buyback at $3.17 with a tight stop-loss at $3.1 and a target price of $3.3. This strategy combines trend following with volatility-based adjustments to maximize returns and minimize risk. Based on the historical data and forecast, Chainlink exhibits an overall upward trend with periods of consolidation. The RSI fluctuates between 50 and 70, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering the support at 15.0 and resistance at 16.0, a strategy focusing on short-term gains within this range is prudent. We will implement a combined RSI and Bollinger Band strategy. When the RSI dips below 50 and the price touches the lower Bollinger Band, we will enter a long position at $15.3. The stop-loss will be set just below the lower Bollinger Band at $13.1 to mitigate potential losses. The initial target price will be the resistance level at $16. To maximize returns, we will employ a dynamic target price strategy. Once the price reaches $16, we will move the stop-loss to break-even, which is $15.3. If the price continues to rise and the RSI approaches 80, we will set a second target price at $16.9, based on the forecast. If the price fails to reach $16 and the RSI falls below 20, we will exit the position at $15.3, limiting our losses. This combined strategy leverages the RSI for entry signals, the Bollinger Bands for confirmation and stop-loss placement, and support/resistance levels for target prices, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Jupiter demonstrates a fluctuating trend with a slight upward bias. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest periods of volatility. Given this, I recommend a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position when the price touches the lower Bollinger Band and the RSI falls below 30, aiming to capitalize on potential rebounds. The entry price will be $0.539, with a stop-loss set at $0.535 to mitigate potential losses if the price continues to decline. The target price will be $0.55, based on the resistance level and potential for price appreciation. To further refine the strategy, we will incorporate the forecast data. Considering the forecast prices are expected to be around $0.52 to $0.546, we can adjust the entry price and target price accordingly. If the price approaches the lower Bollinger Band around $0.52 with an RSI below 30, we will enter a long position with an entry price of $0.52. The stop-loss will be set at $0.515, and the target price will be $0.54, aligning with the forecast price range. This portfolio combines the strengths of both RSI and Bollinger Bands, providing a robust and adaptive investment strategy for Jupiter. Based on the historical data and forecast, reserve rights shows a slight upward trend, consolidating between the support price of $0.00874 and the resistance price of $0.00937. The RSI fluctuates around 50, occasionally dipping into oversold territory but not consistently. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation, but the forecast prices indicate a potential breakout. Considering these factors, I propose a long position strategy. We will enter a long position when the RSI falls below 20, which hasn't happened in the recent past but is a potential entry point. If the RSI reaches 80, we will take a short position. The stop-loss will be set just below the support price at $0.0085, and the initial target price will be the resistance price at $0.00937. To refine this strategy, I will incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity, and when the price touches the upper band, it signals a potential selling opportunity. Therefore, if the price falls to $0.0085, we will enter a long position with a stop-loss at $0.0083 and a target price of $0.0095. If the price rises to $0.00937, we will enter a short position with a stop-loss at $0.0096 and a target price of $0.0091. Combining these strategies, the most efficient portfolio will be a long position when the price touches the lower Bollinger Band, with an entry price of $0.0085, a stop-loss at $0.0083, and a target price of $0.0095. This approach balances risk and reward while capitalizing on the observed trends. Based on the historical data and forecast, Jito demonstrates an overall upward trend, consistently testing and bouncing off the support price of $1.85. The RSI values fluctuate but generally remain within a range, suggesting neither extreme overbought nor oversold conditions. The Bollinger Bands show a narrowing trend, indicating potential volatility. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands to maximize returns. We will initiate a long position when the price touches the support level of $1.85 and the RSI falls below 40. The entry price will be $1.85. A stop-loss order will be placed just below the support level at $1.83 to protect against potential downturns. The target price will be set at $2.14, aligning with the forecast high and the upper Bollinger Band. To refine the strategy, we will incorporate Bollinger Bands to identify potential entry and exit points. When the price approaches the lower band around $1.85 and the RSI is below 40, it signals a potential buying opportunity. The entry price is $1.85, with a stop loss at $1.83. For the target price, we will use the upper Bollinger Band, which is forecasted to reach $2.14. This combined approach aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement and leveraging technical indicators for precise entry and exit points. This strategy offers a high return potential while managing risk effectively. Based on the historical data and forecast, Eigenlayer shows a generally upward trend with recent price fluctuations. The RSI indicator fluctuates between 53.4 and 75.1, suggesting periods of both oversold and overbought conditions. The Bollinger Bands indicate increasing volatility, with the price frequently touching the upper band, implying bullish momentum. Considering these factors, I propose a long position strategy. We will enter a long position at $1.43, coinciding with the initial forecast price and a relatively low point within the recent range. The stop loss will be set at $1.36, just below the recent support level and the lower Bollinger Band, to mitigate potential losses. The initial target price will be $1.57, aligning with the recent upper Bollinger Band and a reasonable profit margin. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 38.2, we will consider averaging down our position. If the price breaks above the upper Bollinger Band and the RSI exceeds 80, we will consider moving the target price to $1.65, reflecting the strengthened bullish momentum. This dynamic approach, with a base entry at $1.43, a stop loss at $1.36, and an initial target at $1.57, provides a balance between risk management and potential for high returns. This strategy will be adjusted based on real-time RSI and Bollinger Band signals to maximize profitability. Based on the historical data and forecast, Quant shows an overall upward trend, consistently testing the resistance level of $96.8. The RSI fluctuates but generally remains within a bullish range, with a recent dip below 60 indicating a potential oversold condition. The Bollinger Bands show that the price is moving within the bands, with the forecast indicating a continued upward trajectory, potentially breaking through the resistance. Therefore, I propose a long position strategy with an entry price of $99.2. A stop loss should be placed slightly below the bottom of the Bollinger Band on May 21, 2025, at $98 to mitigate potential downside risk. The target price will be set at $103, aligning with the forecast price on May 25, 2025, and a conservative projection based on the recent resistance levels. This strategy combines technical indicators and forecast data to capitalize on the anticipated upward momentum. I recommend allocating 60% of the portfolio to this long position, while reserving the remaining 40% for hedging or other investment opportunities. This portfolio diversification will help to manage risk and maximize potential returns. Based on the historical data and forecast, Aave demonstrates a clear upward trend. The price has consistently moved above the center of the Bollinger Bands, indicating bullish momentum. The RSI values, although fluctuating, generally remain above 50, further supporting this trend. The forecast for the next week predicts continued price increases, reaching $287. Considering the support price of $174 and the resistance price of $264, a breakout strategy is recommended. We will enter a long position at $250, placing a stop-loss order at $240 to limit potential losses. The initial target price will be $270, aiming to capitalize on the projected upward movement. To refine the strategy, we'll incorporate the RSI indicator. If the RSI dips below 30, indicating an oversold condition, we will enter a long position at the prevailing price, with a stop loss at $5 below the entry price and a target price of $10 above the entry price. Conversely, if the RSI exceeds 75, suggesting an overbought condition, we will consider a short position, but given the strong bullish trend, we will prioritize long positions. This blended approach, combining trend analysis with RSI signals, should maximize returns while managing risk. The final portfolio will allocate 70% to the breakout strategy and 30% to the RSI-based strategy. Based on the historical data and forecast, PancakeSwap demonstrates an overall upward trend, supported by consistently testing the support price of $2.18 and approaching the resistance level of $2.38. The RSI fluctuates between 50 and 72, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been trending near the upper band, suggesting a potential for a pullback. Combining these factors, I recommend a strategy that leverages the anticipated upward momentum while incorporating risk mitigation techniques. We will utilize a combination of RSI and Bollinger Bands for optimal returns. The proposed strategy involves a long position with an entry price of $2.38, coinciding with the current resistance level. Given the recent price action within the upper Bollinger Band, a stop-loss order will be placed at $2.33, just below the recent low. The target price will be set at $2.46, aligning with the forecast price for May 27, 2025, and offering a reasonable profit margin. This strategy aims to capitalize on the anticipated upward trend while limiting potential losses with a well-defined stop-loss. The RSI readings suggest that the asset is nearing overbought territory, so a cautious approach with a moderate target price is warranted. Based on the historical data and forecast, Curve DAO shows a slight upward trend with volatility. The RSI fluctuates between 47.5 and 70.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. The support price is consistently at $0.671, while the resistance is at $0.73. Considering these factors, I recommend a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. My proposed strategy involves a tiered approach. First, initiate a long position at $0.719, coinciding with the beginning of the forecast period and a slight bounce from the recent low. Set a stop-loss at $0.671, just below the established support level, to limit potential losses. The initial target price is $0.73, the nearest resistance level. If the price breaks through $0.73, adjust the stop-loss to break even and extend the target to $0.738, aligning with the forecast for May 23, 2025. This strategy aims to capitalize on the predicted upward movement while mitigating risk with well-defined stop-loss levels. Based on the historical data and forecast, Pendle shows a generally upward trend, consistently testing and breaching the resistance level of $4.87. The RSI readings fluctuate between 49 and 67, indicating periods of neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility and potential for price movement. Considering the forecast predicting prices to rise to $4.74, I propose a long position strategy. We'll enter a long position at $4.32, placing a stop-loss at $4.21 to protect against a potential pullback. The initial target price will be $4.5, aiming to capitalize on the short-term upward momentum. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we'll consider entering a long position, but given the current upward trend, this is less likely. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. However, given the recent price action and forecast, we'll maintain the initial strategy. If the price reaches $4.5, we'll reassess the situation and potentially set a new target price towards $4.74, contingent on continued positive momentum and RSI readings remaining above 30. This combined approach leverages both trend analysis and technical indicators for a more robust investment strategy. Based on the historical data and forecast, official Trump exhibits an upward trend. The price has been fluctuating within a range bounded by a support price of $12.6 and a resistance price of $17. The RSI values indicate that the asset is generally within a neutral range, with occasional dips below 50 and rises above 60. The Bollinger Bands show periods of contraction and expansion, suggesting varying degrees of volatility. Given this analysis, I recommend a long position strategy. The entry price will be $14.1, coinciding with the first forecast price and a potential upward movement. The stop-loss price will be set at $12.8, just above the recent historical support and below the center of the Bollinger Bands, to limit potential losses. The target price will be $15.5, aligning with the highest forecast price and the upper Bollinger Band, indicating a potential profit zone. This strategy combines the upward trend, RSI readings, and Bollinger Bands to maximize potential returns while minimizing risk.